Hey traders, this is Ron Hayden at Market Tamer. Hope you guys are doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. Can always be addressed with your financial advisor. We'll kick off here with the diamonds, the Dow ETF down whopping 35 cents. You can see we're just going nowhere fast. Keep an eye on the 50-day moving average in orange and the 200-day moving average in purple. They're both institutional. And if we get below these big time moving averages, that's what opens the door to a whole different conversation. Spiders lost 0.5% today, but still above the 20-day EMA, which is the short-term moving average. So overall, if you exclude the Russell and the mid caps, it's neutral to slightly bullish because the S&P is still above the 20-day. If we get a big down day in the market this week and the S&P gets below the 20-day, we'll start to have a different conversation where now it's neutral and keeping a really close eye on these big time moving averages. Next, I want to talk to you about some seasonally bullish stocks. I had an event today at noon Eastern, went over like gangbusters. The commentary that I'm getting is absolutely fantastic when you see the power of these seasonally trending stocks. Call it sector rotation, call it whatever you want. It's uncanny how it works historically. Look at EDU. This is New Oriental Education. Stock's already gapped up on earnings, sideways, now it's popping higher again, all in a seasonal bullish window. This stock moves higher as much as 91% of the time by double digits. The next upside target is here and here. How about Tiffany's, the little blue blocks company? Magically, there's an earnings report and the stock goes higher. We're all taught that earnings matter. They leave out one key component. Earnings matter, ... but only if the big money cares. Without the big money, these stocks can't go up and down. Tiffany's has a historical track record of running, in its history, 83% of the time it moves higher over the coming weeks. Double-digit gains. It's extraordinary. And what? Look what happened. Earnings, and it just runs. There is seasonal biases to earnings reports. Knowing which side of that coin to be on can be priceless. How about the Home Depot? Here was earnings. Magically, it finds support. Now it starts ramping. It's like, what changed? Here was earnings. All of a sudden, well, I'll tell you what, it's entering its seasonally bullish window. How about C-Trip? Gapped up in its seasonal bullish window, going sideways, starting to get ready to break out again. Target previous highs. It's over 20% higher from a technical perspective. Even ULTA, ULTA, gapped up, seasonally bullish window. No shock again. You keep seeing me talk about this because it just keeps working. And if you look at Xilinx, seasonally bullish window. When I send out those emails saying that these long calls from here until here were up as much as 562%, that's because the stock had a seasonally bullish window. How about Checkpoint, CHKP? This was a triple-digit return too. Even when the market was rallying hard in January, this stock didn't move much. Seasonal window, they bought it ahead of earnings, they bought it post-earnings, and what do you know? Stock jumps over 10%, options triple-digit return too. So, last chance is tonight. If you're getting this email in time, there's 8 p.m., there's still a couple seats left. Register ASAP. This is what we're going to go over. I'll show you. It's going to look similar to this. Stocks are going to be going nowhere, right? Just like Checkpoint, and then magically it pops higher. Well, this is a chart of another one where this is what the stock has done. This is what the stock's probabilistic future price would be if it lives up to its historical averages. And look at all of a sudden we go higher, then there's periods of dead time, and then we go higher again. Knowing when these pockets of time are, I could literally move my capital around surgically into the right areas. So you got to be at this event. Please register ASAP. Now, two other stocks I had questions on, CRON and Boeing. Here is Chronos, CRON. Lots of drawings here. This was the breakout point on CRON back in January. Rips up, but look what's happening now. We're getting below the 50-day. It actually happened back on the 22nd, which was Friday. Now it's happening on Wednesday. Where's the target? The old breakout point, somewhere down around 13. That's significantly lower. And Boeing, I got a question on, what does it look like technically? Massive rally, right? Now there's a 737 MAX issue, the horrible crashes. It's still tracing out a bear flag. That means this is the flagpole. This is the flag. It's going nowhere fast. Before Boeing could be considered technically bullish, I don't care about the volume, just forget about it. It needs to get back above the 50-day. It's got to take out both the 20-day in red and the institutional 50-day. If that happens, target gap fill, previous highs. If it rolls over and gets below the 200-day, well, the next target's down there at that double bottom at 300. So if I were to do this on Boeing and draw you guys a box, where are we in the box? We're sort of in the middle. So assuming this stock had no bad news out there, it's a 50-50 coin flip up or down. We could go up, we can go down. The fact that this is a bear flag lends more technical analysis to be bearish, but because there could literally be a fundamental event about Boeing, did they, didn't they? Did the FAA do something? Did they, didn't they? There's too much speculation. This thing could easily go either way. Right now, the folks that bought on that dip, because I remember listening to CNBC on the radio, there was some famous investors saying, oh, we bought on the open and it got worse and we bought more. Well, they were bragging how well they were doing, right? Because it was up at 400 by the end of the day. They made 10% in a day. That's all been given back. This could easily go a lot lower or it could go higher. I still think caution is warranted. And if I own Boeing shares, which I don't, but if I did, I'd still want some protective instruments like protective puts near the money, 90, 120 days, maybe even a little longer, just in case something bad happens. Okay? Wish you guys all the best. And remember, I hope to see you at tonight's event where I'll show you the hottest stocks for the weeks ahead. All right? Take good care, and I'll see you later.